G'day everyone, welcome to the update for global stock markets for the 17th and 18th of October. And we had another pretty amazing week. The markets showing a lot of strength and really confirming the breakout and particularly the action around Thursday and Friday. I mean, the action over the last couple of weeks has been pretty bullish, the sharpness of the rebound. But the market then went up and hit resistance. But then Thursday and Friday, the way that it dealt with that resistance was really, really impressive. So it's whilst the index is a bit overbought in the short term, it's getting pretty hard to deny that the correction looks to be over now. So let's take a look at what happened last week. The S&P index ended up by 28 points higher on the week, and very impressive. Now, from here, there are two alternatives. One is we could be in a period of larger consolidation over a broad range, and that could last for some time. Or it could be the bull market renewing. As you know, I don't buy into the, and haven't done from day one, I haven't bought into the bear market theory because there's never been a bear market without a recession, and there is no recession on the horizon. And also the other three or four main precursors for a bear market just do not remotely exist. Things such as interest rates having gone up substantially, over-exuberance in the market, overvaluation, etc., etc. So I never bought into the bear market. I think we've either got a big sideways consolidation at worst, or we've got a bull market renewing. We won't know which for probably another 3 or 4 months when we look back in hindsight. So let's take a look at, we'll just have a look at the Australian market first, and then we'll take a quick peek at all those charts. The Australian dollar remains in a counter trend rally. The big trend is down, but within any downtrend, there's always little counter trend rallies to the upside. We're in one of those now, I believe, and the downtrend will resume. I would assume as soon as the US dollar plays out a little bit lower and then turns higher, because really that should be the outcome there. So the US dollar is down short term, but the longer term pattern for the US dollar is still quite bullish. So again, we're just getting a consolidation of that major upward move. 75 cents on the Australian dollar looks possible. I'm not saying it necessarily will go there, but that looks possible. But then I would expect a resumption of the downtrend and to see the Australian currency down below 70 cents by year end. Now the ASX index ended up down by 12 points on the week, so it definitely underperformed. It'll probably go up a bit on Monday to compensate, but probably not that much. So I think we definitely underperformed the American market. But as you'll see from the chart, it does seem to have cleared the downtrend channel at least. So maybe the index will stop falling from where we are now. So let's take a look at the S&P first of all. I'll pan back and take a bigger view. So the last time we had any sort of real volatility was October in 2014. The market then immediately rebounded and marched higher until we've got into this period here, which is certainly a longer period of correction, and also a deeper period of correction. And as a consequence of that, you can see the red 150-day moving average line has rolled over, and the price has spent a significant amount of time below that moving average. When you look over here in October of 2014, it was below that moving average line from the 10th of October until the 21st of October. So only 11 calendar days, probably about 7 or 8 trading days. So quite brief. Now this one started on the 21st of August, and here we are in mid-October. So this has been running now for 2 months and is still below the moving average, which has turned over. So clearly a change in character of the market, which is one of the things that I look for. For those of you that have been watching these videos for some time, you'll know that that's what I keep my eyes open for all the time, whether it's an index or whether it's a stock. I look for indications that the price behavior is starting to do something different from what it has traditionally done in the past. And we certainly have that with the S&P index. But that doesn't mean that we have to go into a bear market. The other alternative is that you just get an extended period of sideways movement, and that could occur between, let's say, this 1874 level and perhaps up here around the 2100 level. We could conceivably at the index level just meander sideways like that for some time. Now, the sectors that I deal with are now providing extremely attractive value. So I don't expect those sectors to behave in such a fashion, but certainly the index could do that. Now, you can see we had a very, very sharp decline into the first leg of the W. We had a recovery with big reversal at 2020. Went down, completed the second leg of the W. Again, a very strong reversal. You can see there's a doji candle there at the bottom, and then immediately a very powerful reversal candle coming out of that. So this 3-day cluster, one big day down, a day of complete indecision, and then a big day up. That's a very, very clear reversal. And the market then went on with it impressively. And if you look at the range from top to bottom, these are big ranges. There's a lot of conviction in this trading, and nearly all of them closed on their highs. This one didn't, but it was only down by a minor amount. Close on the high, close on the high. A couple of indecision days, a very, very shallow and weak pullback, and then off again. And you can see Thursday, it just popped its head above the 2020 level, that dotted line. But then on Friday night, it just went on with it and went straight through and again closed on its highs. This is impressive stuff, and you can't. I think even the most ardent bear would have to acknowledge that this is pretty impressive buying momentum. Now, I've drawn another line here which just picks up the lows from July. That was really the previous low point that had been established. There will be some resistance there, no two ways about it. And it's how the market behaves around that level, which is around 2047, will just be another piece of the evidence puzzle in terms of where the market's going. Are we resuming a new uptrend, or is this some sort of broad consolidation? We don't know the answer to that, but certainly over the next few days, we should get an indication of that. So that's the S&P index. And just looking at the monthly chart, which we look at from time to time, you can see this pattern very similar to 2011. August was weak, closed off its lows. September was weak, closed on its lows. And then October was the big turnaround. And you see the pattern here, very, very similar this time round. So, I don't really, at a big picture level, I don't really see a lot different to what we saw in 2011. Turning now to the ASX 200, you can see that we had a very clear downtrending channel. We broke out of that channel briefly in July and early August. We then formed a wedge within that channel, and it looked like we were going to break that wedge to the downside, but it immediately reversed and not only broke the wedge, but also broke out of the channel. Now, it's not definitive and it's underperforming America, so I'm not saying that the Australian index is about to go into some big uptrend and head back to 6,000 points. Far from it. I think our economy is a big issue, and it's going to hold. It's going to hold a lot of the major stocks that drive the index back, I believe. So I'm not getting at all excited about the Australian market yet. Turning now to gold. This is the gold on a weekly chart. You can see it's so far held that long-term trend line that started in 2006. So we've held that. We've also got a wedge that's been forming here over a lengthy period of time. We're still only sitting about the middle of the wedge, so there's still a lot of work needs to be done. Gold needs to get up above that wedge at, let's say, just over 1300 and also above this peak here. So gold needs to do a fair amount of work yet. We're talking a move from around 1175 to just over 1300. Still a fair bit to go. Zeroing in on the daily, you can see we have formed a new short to medium term high, but it did turn down a bit. And also too, I mean, this recent strength in gold is really just about the US dollar weakening. I don't see that there is, an increased trend in gold. I think this is just about the US dollar being down. And as you're aware from what I said previously, I think that's a temporary measure. So therefore, I can't get excited about a sustained move in gold. And if we look at the HUI index, which is for gold stocks, there's nothing really happening there. It's still below the 150-day moving average, which is still pointing down. So, there's a few gold stocks that are doing a little bit better. But, it's just not something I can really get excited about at this stage. So just to confirm that, gold higher by 17 for the week and no real change and no real confirmation by gold stocks. Now, some Aussie gold stocks are far better off because obviously gold in Australian dollars has strengthened considerably. So that's why some of the Aussie gold stocks have done better. But beware, I wouldn't be surprised to see gold turn back down again. Copper was higher to 248, but again, this is just purely currency effect. Crude oil was down around 45, managed to get back to 47, but it remains stuck in this range between 42 and 50, and I don't see anything that's going to drive it out of that range, to be honest. So is this a continuation or accumulation? What I mean by continuation is we've got a downtrend in oil. We are having a period of consolidation before that downtrend continues. So in other words, this is a pause in the overall downtrend. Is that the scenario, or have we hit the bottom and we've now got basically a phase one accumulation period occurring before oil breaks 50 and goes back up into an uptrend? I don't know the answer to that, but from a fundamental point of view, it really should be the first one, a continuation in an ongoing downtrend, because none of the real circumstances that have led to the relative supply glut versus the demand has changed. Now, don't get me wrong, I'm not saying the demand is weakening. It's not. Demand for oil is still rising. It's just that sorry, I just lost my train of thought there with my phone going off. It's just that the supply is absolutely swamping, the other side of things. So anyway, we'll see how that one plays out. This is the spot copper chart, and finally the overall strategic approach. The correction does look complete to me. Earnings season should help finalise the remaining uncertainty. We're in the earnings season now, and so far it's nothing dramatic. It's about what you'd normally expect. So my suggestion is, obviously members know very clearly what my suggestions are, but for anyone who's a non-member who's following this on a big picture level, I think it's okay to start to rebuild exposure, doing it with some caution, however. But as I've been saying all year, you just don't want to play in anything low quality or speculative, because you might get your head handed to you on a plate. Markets are just unbelievably brutal these days to any downside misses. So retain a focus on the highest quality stocks you can find that have got earnings reliability for at least the next 2 years and that represent really good value. And look, frankly, if you don't know how to do that, you shouldn't be in the stock market. I don't know how to put that else gently. I don't think I should put it gently because it's about that simple. Unless you know how to do this, then the stock market is a fairly risky place. If you do know how to do it, if you do know how to identify really quality stocks that are their earnings are going to come through with high degree of reliability and they represent good value, then I think the stock market is a great place to be participating. So just to wrap up, anyone who's a non-member who would like to converse with me, there's my contact details, and let's see what next week brings. Cheers.